Hello everyone, welcome to another beer with Dom Live. So thanks for joining. This is actually the fourth episode that we've done. So we're I think it's fair to say that we're a month in. Seems to be going well so far. So thanks for tuning in. Today, let's talk about what happened this week. So this week, we had quite a bit happen. Actually, no, I got to remember to do this. The whole point of this is to share what beer I'm drinking first, right? So what I'm drinking, it's actually called Moon Dog. So Moon Dog Craft Brewery. It's an alcoholic ginger beer. I have to be honest, I've tried a few different ginger beers before. And I find that most of them are either not sweet enough or they're too sweet. And this one's actually in the middle, which is the way I like it, but it's also very sour. And I'm not loving the sourness. But it's not too bad. It's not too bad. I just think if it wasn't as sour, it would be a little bit more refreshing, but not too bad. Going into what happened this week, so we had Tesla. They won their approval today for the Berlin factory. However, before the factory in Berlin can actually begin production of its vehicles, it does require a few final things from the developer that the environmental ministry has asked for. Elon has shown a little bit of frustration towards this. There's a lot of regulations to go through in Berlin there. Elon Musk also invited the UAW, which is one of the largest. I think it's called the United Autos Workers Union. So it's one of the largest unions in America. He invited them to hold a vote in the Tesla California factory. He offered them to do it at their best convenience. And said that he believes that the vote would be unsuccessful, but also expressed that democracy inside Tesla is important. Should employees elect to be represented by the union. Airbnb said that they would house 100,000 Ukrainian refugees, showing the positive power of big business, in my opinion. Many businesses have also halted operations or business associations with or in Russia, showing strong stances in regards to what's going on at the moment. Ford has elected to run its EV business separately. Many have suggested that this is to protect the company financially, but many have also criticized the company, with shareholders now second-guessing whether Ford is as serious about electric cars as they expressed over the last 18 months. Rivian also announced last night that they're raising the price of their vehicles by about 20%, frustrating many of the reservation holders. I'm in a couple of the Rivian owners groups on Facebook. I don't own a Rivian. I'm in Australia, so it'd be very hard to get one anytime soon. But I join these groups just to get an idea of what the customer base is like, and what people are looking forward to. And a lot of them did show a little bit of disappointment. Lucid Motors also had their earnings call this week, underperforming on vehicle deliveries, and they also lowered their goals for 2022. And NIO is set for a second listing this month on the Hong Kong Stock Exchange, and this is really to diversify risk in terms of political risks, really. So I did a video on it, and I spoke about how the federal government in America has been very strong towards Chinese listed companies on the American stock exchanges. And this has negatively affected NIO's price. I think that towards the end of last year, and definitely in January and February, we did see that most electric car companies did have quite large dips. However, NIO's been going down for a lot longer than a lot of these other car companies. And a lot of it is, in my opinion, unjustified. They're undervalued, or they're valued less than companies that have delivered less than 1,000 vehicles, and NIO has delivered tens of, I think they're even in hundreds of thousands of vehicles now. I know they're at least in tens of thousands of vehicles, and they're an international company. They don't just sell vehicles in China. They're also in other countries. And you know, they've also got their own differentiating power. They build their own battery packs. They're building cars really well. They continue to increase the rate of the vehicles that they were producing during the pandemic, even with supply chain constraints that everyone is going through now. Let's go and have a look at today's market. So we got Webull. So I really need to go through, because I haven't got enough in my watch list here. So I really need to go through this and actually put a few more in here. But these are the ones that are on my watch list anyway. So we've got the S&P 500. We've got 1.84% today. To give us the week. No, it doesn't. Maybe I can add that in. We have Lemonade, which is down. Lemonade's been pretty crazy. Mind Medicine down. Shopify down 0.86%. Amazon up. Airbnb up by 4.32%. That's pretty impressive. EVgo has been absolutely killing it the last 2 months. EVgo was definitely one that I thought was going to get pretty hard in February with a lot of the EV stocks getting hit. So, but you know, I'm very, very bullish on EVgo, and it has worked out to be one of the best investments I've made so far in 2022. Definitely go check them out. Not financial advice though. ARK Innovation ETF down, NEO down, as we discussed before, Lucid down, and they did have quite a large dip after the earnings call as well. And Tesla is up today, but it's fair to say they're definitely down quite a lot from where they started this at the start of this year. Is this going to load? Oh yeah, here we go. Now we're really getting through it. Stocks, so markets. Here we go. So top gainers for today. Don't know any of these. Top losers. Hopefully I don't know any of these. That's a good thing. Got 52-week high. Lockheed Martin at their 52-week high. That's impressive. Near high. Don't know any of these companies. Hit their newest lows. Foot Locker down here. Near their low, we have. Don't know any of these. Either earnings calls this week. So we had quite a few earnings calls this week. We had Lucid. I believe we have had NEO as well. Neuronetics. Don't know any of these other ones. Stock splits, I don't think. Oh, I've got a couple of stock splits. Don't know any of these either. Let's have a look over here at coin market cap. So over here we've got coin market cap. Let's have a look. So we've got Bitcoin down today 2%, up in the last 7 days 21%. That's pretty big. And then Ethereum pretty much trailing it there with slightly bigger loss today. We have BNB up 20%, XRP up to almost 20% as well. We've got Terra Luna up 77%. That's quite impressive. We have Solana up 22%, Cardano up 18%. I think that's a new position for Terra as well. We might have a look at that a little bit later on. We've got AVAX, we've got Binance, Dogecoin's back slowly going down the leaderboard, but up 16%, Polkadot at 26% for the week. And quite a lot of these other ones here. We got Polygon up 23%, Kronos up 20%, even Litecoin up 17%, Cosmos up 44%. That's definitely a new position for Cosmos. Chainlink 27%. Chainlink is very similar to VeChain. VeChain's one that I still hold, and probably will hold for quite a while. We've got Decentraland up 17%, Phantom up 40%. That's massive. So we've got, here we go, VeChain. Even VeChain's up 33%. Axie Infinity up 19%. So that's one of, I don't know, 23%. Sorry. So obviously, I think this is suggesting to me that crypto might be back, baby. So it'll be interesting to see how that goes. Haven't got any comments so far, but yeah, it'll be interesting to see how crypto goes for the next couple of weeks. It's been really strange actually to see that since the geopolitical or the geopolitical crisis that's going on, that stocks and things and crypto have actually gone up. Let's have a look at the Wall Street Journal. So obviously a lot of stuff about Ukraine on there. We're going to go here to no. We've got stocks here, markets, stocks. Let's have a look at stocks. So I went over this in a video a couple of days ago. So if you wanted to know a little bit more about that, just check out my channel. There'll be something there. A lot of what to watch, which you do actually see during early times when stocks tend to be on an uptrend. There's a lot of, hey, watch this, hey, watch that. And that's generally because it's clear that a lot of people have noticed that the major consensus in the market has changed. And this can be due to many different factors. But one of the main things that people look at is, okay, what's the next hot thing if this is a bull run coming up? Gee, we haven't really got anything super interesting on here today, I've got to be honest. So there's a lot of what to watch, what's next. Enphase Energy. So I might do a video on Enphase Energy this week. I've been following Enphase Energy for quite a while now. Very, very impressive company. Yeah, let's have a look at this. Traders struggle to value Trump's social media company. So this has been in the news quite a lot, actually. I should probably actually sign in here. So quickly sign in. One of the Wall Street Journal is one of those ones that make you pay, and it drives me nuts a little bit. Here we go. We're in. We are in. All right. How much is Trump's new social media company worth? Traders can't decide. So this will be an interesting take. Obviously, I'm reading from an article here. If you're watching this video, this isn't my opinion, but let's go through the article and have a look. And maybe I'll add my comments in here and there, and I'll try and make that obvious. So, traders are struggling to place a consistent value on Donald Trump's new social media venture, a business that hasn't offered much in the way of details, but one that supporters think of destined to take off. Shares and warrants of Digital World Acquisition Corp, DWAC, the special purpose acquisition company that is merging with Trump Media and Technology Group. So basically, if you don't know what Digital World Acquisition Corp is, basically it's a SPAC. So basically how these SPACs work is they'll create the SPAC first, and they'll release it. So it's basically a special purpose acquisition. And basically they'll release it at a value of around, say, $10 a share. people will buy in, speculating what the company is, and then basically that whole share or that public company is a blank check, figuratively speaking, and they merge with another company, and then eventually that's how that company goes public. Has been a very popular way for smaller companies or to go public, or companies that feel it's a little bit premature for them to go public themselves, to get involved, which I think is really beneficial. If you go back 5 years ago, between 5 and 10 years ago, there was a period where a lot of companies were very scared to go public. And I do think that this was disappointing for employees that jump in early. I know a lot of these technology companies, engineers will jump in and they will own shares. And if that company never goes public, they never get an opportunity to realize the potential income from those shares. So it is important that companies do go public as they get big enough, in my opinion. So if it's a way to get these smaller companies to go public earlier or at all, I think that's positive. The SPAC's shares have traded around $80 in recent days, preserving a 700% rally since the deal was announced in October. They are up more than 60% this year, bucking the broad sell-off that has sent SPACs and stocks that are popular among individual investors such as GameStop Corp tumbling. So the stock's current price implies a valuation of several $billion for Mr. Trump's startup, a remarkable figure considering little known about the company other than its plans to launch a new social media platform called Truth Social and capitalize on his following. The company said in December that it had $1 billion in commitments from investors as part of a SPAC deal, and that California Republican Rep Devin Nunes was leaving the House of Representatives to become the company's chief executive. While shares and options that allow the holder to buy more shares at a specific price in the future have surged, warrants tied to digital world have lagged behind, baffling some traders who argue they are mispriced relative to the stock and expected the gap to close. Warrants are similar to options but originate from the SPAC. They can only be exercised after the company's SPAC deal closes. Warrants typically have a strike price of $11.50, meaning the holder would pay $11.50 to receive a share of the company. But DWAC warrants are trading around $27 compared with the stock's $80. Some analysts say they are undervalued because, assuming the deal closes with the stock price roughly where it is now, warrant holders would pay $11.50 per share and could immediately sell at the market price of several times that. By that logic, some analysts say the warrants should roughly trade at the stock price minus $11.50 or in the high 60s instead of the high 20s. Several factors are likely holding down warrant prices, traders said, namely uncertainty about the deal closing with the stock at the current levels, meaning the price there. Trump Media and Technology Group still has to release its financial ownership structure before the deal can be completed and the warrants can be exercised. That process can take several months and could show that Mr. Trump's company is far from becoming a profitable business. I think anybody going into this deal thinking that this is a brand new social media company that hasn't actually launched yet, is anywhere near profitable, has lost their mind, let's be honest. The Securities and Exchange Commission is also investigating the merger. The gap between shares and warrants is evident that individual investors are driving up more well-known shares and options, some analysts said. Digital World stock ticker, DWAC, has been trending on some social media platforms in recent weeks, and its trading volumes at times have been comparable to those of much larger companies. This is the meme stock of all meme stocks because it's Trump. said Matthew Tuttle, whose firm Tuttle Capital Management runs a few SPAC exchange-traded funds. Meme stocks gained popularity among online traders for reasons other than their business prospects, as GameStop and others have in just the past year. Call options tied to DWAC shares jumping to $90 or $100 have been among the most widely traded in recent days, according to SIBO Global Markets data. More sophisticated traders are likely trading the warrants, analysts said, tempering their expectations about where the stock will trade when the deal closes. The warrant price is still unprecedented for SPACs and implies the valuation of Trump Media and Technology Group in the billions, albeit a much smaller one than the stock price does. The announced valuation in the deal in October was $875 million, including debt. The $1 billion in investor commitments for the company announced in December also were based on a big discount to the current stock price, potentially offering those investors a risk-free profit if the shares stay elevated. Traders expecting the gap between the shares and the warrants to close in the coming months could buy the warrants and try to short the stock by borrowing shares, selling them, and aiming to buy them back at lower prices. The challenge is that wild trading in DWAC has driven the fee to borrow shares to exorbitant rates, according to the data from technology and data analytics firm S3 Partners. That high borrowing fee is one reason the number of shares shorted is still relatively small, even though it had ticked higher lately, investors said. The SPAC, such as DWAC, is a shell company that raises money and begins trading publicly with its sole intent of merging with a private firm to take it public. This is what I explained earlier in the article. After a merger is announced and regulators approve the deal, it gets completed and the private company replaces the SPAC in the stock market. Such deals have become popular alternatives to traditional IPOs, initial public offerings, since 2020, in part because they permit the business projections that aren't allowed in IPOs. Shares with many SPACs surged alongside meme stocks early last year, but have since tumbled, with investors bracing for higher interest rates and retreating from speculative trades. Yet digital world shares remain high, confounding many on Wall Street. It's tough to understand, said Julian Climaco, who announced managers of a SPAC-focused fund at Accelerate Financial Technologies. So, thanks for that, everyone. So, if you haven't joined our Discord group too, I would love if you could join the Discord group. So I've got it down there. So it's domwarnaar.com/Discord. There's a couple of us in there now. It's very slow growing, but it's getting there. We do try and chat on the daily, and we talk about anything from stocks, business, finance, investing. We get into all of it. We'll even discuss, if there's a big event going on, we'll talk about that as well. So I wanted to thank everyone for jumping on today. Really appreciate it. It'd be good to see you again next week. So we do this every Thursday. And every Thursday we go over from 9 p.m. Call it Beer with Dom, and we just go over what happened this week. We'll have a look at the markets. We'll have a look at the crypto markets. And then we have a look at a couple of articles there on the Wall Street Journal or somewhere else. So stay safe out there, everyone. If you do like this, please feel free to subscribe and obviously like and share the video. So thanks for watching, everyone. I will catch you next week.